Good morning, everybody. Thanks very much for joining us. Super panel here today, part of our European Outlook series for 2022, and this is the focus on CEE. Really great panel coming up. A couple of presentations to begin with, just to sort of give a sense of what's happening overall in the market, a broader macro and political perspective, and then also a focus on the real estate markets, and then an active discussion. And of course, really looking forward to the views of all of the speakers as well as your views. So please do feel free to put comments, questions, and we'll try to address those in the session. But first of all, I'm going to hand over to Marek Matraszek, who's chairman of CEC Government Relations, just to kind of give an overview of the sort of macroeconomics and politics. And we normally have Marek with us in Warsaw. I'm so delighted that he could join us today online. Marek, over to you.
Well, thank you very much, Richard, and it's great to be here with you this morning on what is I'm sure will be a fascinating event that Richard and his team have put together. As the CEC Group, we've been proud to have supported these events over the years. CEC Group is a major independent political consultancy operating throughout Central Europe, assisting foreign investors, foreign multinationals in their maneuvering, as it were, through the legislative, regulatory, political, and policy processes in the region, which are so important for making investment and business decisions across a range of sectors, including the real estate market, which is particularly sensitive to the long-term, both the medium-term and the long-term economic and political prospects of markets. And the reason why I think it's great that we're meeting today so early in 2022 is that 2022 promises to be, or perhaps promise is not maybe quite the right word, there's a warning that the Central Europe may be an area of Europe where the various forces acting on the region will cause a new dynamic which will be political, which will be economic, and which will be social. So it's really a crucial year for the region. So I think the first important vector, if you want to use that word, impacting the region is the United States. The United States, and this is the first change, we've seen already that change happening over the course of last year, of 2021, after the presidential elections. Now, remember, under the presidency of Donald Trump, the United States was pursuing almost a dual-track policy towards Europe and towards Central Europe. One track was to focus very much on Central Europe as a region. Donald Trump was very much in favor of the 3 Cs initiative, which I'll come back to later. But he was also interested in forming deep bilateral relationships with specific European Union countries at the expense of others. And the best examples of that are obviously Poland, or were Poland and Hungary. Trump had a particular ideological and political affinity for those countries, as we know. And he was interested in developing that bilateral relationship to, as it were, move around the institutional framework through which historically US presidents have operated, primarily NATO and the European Union in Brussels, driven by his suspicions and caution towards a deeper bilateral relationship between the United States on the one hand and Germany and France on the other. Now, under the Biden administration, that has all changed, or at least that was the idea that it would change last year. When the Biden administration came in, Joe Biden had a couple of 2 or 3, together with his team at the State Department, Antony Blinken there, moving into the position held previously by Mike Pompeo, had a very clear view of what they wanted to achieve in Europe and in relation to Central Europe. On the one hand, they wanted to resuscitate institutions. They wanted to start working again through the European Union directly with Brussels. They wanted to reinvigorate NATO, and that meant re-establishing a direct and good relationships with Brussels on the one hand and Germany and France on the other. And that meant perhaps removing Poland in particular, and Hungary especially, from the sense that they had a privileged relationship with the United States. Now, the second factor that came into play was that the Biden administration and the Blinken State Department have started to place a great deal of stress on things like human rights, rule of law, media freedom issues, and also a vague sense of cultural issues which talked about things like gender identity, LGBT rights, and other national minority rights, and so on. All of which of those issues were not that important for the Trump administration. And that was the second factor which led to Poland and Hungary, and initially Czech Republic and one or two other countries in the region, to be put on what you might call a second tier of relationships with the United States. That was reflected in the fact that for a long time, in the case of Poland, President Biden did not interact directly with the Polish administration, either with Prime Minister Morawiecki or with President Duda. It took a long time for phone calls between the two heads of state to occur. And there was also a clear cooling off at the level of the State Department. Poland, after the departure of Georgette Mosbacher, who was Trump's political appointee from Poland at the beginning of 2021, no ambassador for over a year. So what that picture really shows is that Central Europe, for a while, stopped being the priority of the US administration. The focus was very much on bringing together the US relationship with Brussels, with Berlin, rebuilding a fractured relationship with Angela Merkel, while she was still chancellor, obviously with President Macron there as well. Now, over the last couple of months, primarily because of the increasingly obvious Russia crisis on the eastern flank of NATO, we've seen the US administration in recent weeks and months, certainly towards the end of 2021, repivoting back towards Central Europe, recognizing that in the face of a resurgent Russia and the Ukraine crisis, that the requirement for a very strong primary defense relationship with Central Europe remains an absolute priority. And we've seen the US administration working hard to re-establish its credibility in the eyes of Central Europe, both as a strong NATO partner, but also in a bilateral relationship in terms of defense sales, particularly into Poland, Slovakia, and Romania, and other frontline states. So trying to, as it were, separate out all those difficult issues that Central Europe is facing in its relationship with the United States. But as I said, in many cases over things like rule of law and media freedom issues being put to one side, and a refocus on a re-cementing of that relationship on the defense and security side. That's not to say that the US administration, the Blinken State Department, have forgotten about those difficult issues, but obviously in the light of the Russia crisis, they've been parked. And Poland in particular, encouraged by the fact that the US administration moved relatively quickly to appoint a new ambassador who arrived in Poland last Friday, the 21st of January, Mark Brzezinski, who is the son of the late Zbigniew Brzezinski, who was Jimmy Carter's national security advisor back in the late 70s, and the brother of the well-known analyst Ian Brzezinski, and a very well-known media family in the United States. Mark Brzezinski being seen as a very important player now in Warsaw, as I said, trying to work together to rebuild that confidence of that relationship between the United States and Poland. And we've seen similar moves with the State Department in relation to other Central European countries. So that is one important, as I say, shifting vector of influence on the region. Obviously now that renewed confidence of the United States administration in Central Europe reflected in other areas, not just defense, but also energy. We've seen a very strong support by the US administration for nuclear programs in the Czech Republic and in Poland, and obviously continued support for strong US investment in the region. And I'm sure we'll see more of that next year as well. So on the economic front, on the security front, a lot of progress in the US relationship, but also some hesitancy because of what I say, rule of law, media freedom, and cultural issues. Now, that's one set of vectors. Now, I've already mentioned Russia. And that is really the absolute new driver of what is going on in Central Europe today. Remember, Central Europe's history of the last 30 years has really been about getting away from the orbit of Russia and moving back into a strategic position with the West in terms of institutional membership, primarily of NATO and the European Union. And Russia's potential aggression against Ukraine, or actually continued aggression given their previous invasions that they've masterminded in eastern Ukraine and in Crimea, are really designed not just to subordinate Ukraine as an independent sovereign state and perhaps establish a rump state which would be run by a puppet regime beholden to Moscow. That's one part of their strategic goal, clearly. But the other strategic goal, this is one where the Central Europeans are particularly worried about, is an attempt by Moscow to reverse the progress that those countries have made over the last 30 years in terms of their integration with the West, to try and separate out or create almost a second-tier membership of NATO in relation to those former satellite states like Poland and Romania, or former Soviet republics like the Baltic states, and trying to exert pressure on NATO to either withdraw armaments or reduce their security guarantees to the region. That's totally unacceptable to Central Europe, and something that is not going to happen. But what Russia is trying to do is to exercise new soft power into the region, whether it's through energy, using the potential Nord Stream 2 pipeline as an instrument of energy blackmail towards Central Europe and indeed Germany itself, whether it's through cyber attacks, whether it's through propaganda warfare, using various soft power mechanisms to try and create and foment division within the political elites and between the elites and societies of Central Europe as a way of cleaving out this region away from its historical refocus towards NATO and Brussels and the European Union. Now, the third vector of influence is, of course, the European Union. I've touched on that already in saying that the Ukraine challenge, the Russia challenge, is a great test of European Union intentions. Now, the Russia crisis, to a large extent, caught most people by surprise. We saw tensions mounting, but nobody towards the second half of last year was not really expecting Putin to step up his preparations for a potential invasion to the extent that he has. And the European Union was also unprepared for this. And we already saw last year a fairly strong shift within the European Union towards the way they treated a number of Central European countries. And here I'm going to focus on primarily on Poland and Hungary, where over the last year, we saw an increasing consensus within Brussels and within the Commission, and also amongst other major European players, primarily Germany and France, about how the Commission and how the European Union should respond to what the European Union were viewing as transgressions by Poland, Hungary, one or two other countries. Bulgaria is another Eastern member of the European Union that's on the naughty step from Brussels' perspective, on issues such as rule of law, media freedoms, LGBT rights, abortion rights, policy towards migration, a range of issues which had been festering for a number of years in the eyes of Brussels, but were coming to a head during the course of last year. But we've seen the European Union increasingly linking progress, or what it sees as progress in Central Europe on all those difficult issues, with cash transfers, particularly on the European Recovery Plan and also on the 2020 European financial perspective, linking progress made by Central European countries on these cases with the passing to Central Europe of these very considerable numbers of transfer funds that are actually due to Central Europe. And this week, we'll be seeing a very important judgment by the European Court of Justice on the legality of this conditionality of linking transfer payments to Central Europe with progress on rule of law issues. And that'll be a crucial judgment because depending on which way that judgment goes, it will drive the dynamic of the relationship between Central Europe and Brussels to a large extent in 2022. Just very finally on the European Union and these two countries in particular, Hungarian elections coming up on April the 3rd this year. Very strong efforts being made by the opposition in uniting around a common electoral list to defeat Viktor Orban's Fidesz party. I was in Budapest a couple of weeks ago, and the mood within the ruling camp is increasingly optimistic that they will win those elections, mainly due to the very poor campaign, relatively speaking, which is being run by the opposition. But nonetheless, if Viktor Orban does win those elections, that will be a problem for Brussels, because, yes, you can threaten Viktor Orban with conditionality of EU payments for a few months, but can you do that for another 4 years? In other words, can the European Union afford to have a permanent awkward squad on its eastern flank at a crucial moment of tension with Russia further to the east? Is this a sustainable policy of the Commission and the EU? A lot will be driven by what is going on in Germany. The new German government, led by Olaf Scholz, has a slightly different view on Central Europe than Mrs. Merkel. Mrs. Merkel, although she was critical of countries like Poland and Hungary, she really did put a primacy on EU unity. And on the margins of conflicts, she always tried to temper them to ensure that there would not be a crunch divorce with Central Europe. The new German government, Olaf Scholz and his foreign minister from the Green Party, have a much more robust attitude towards Central Europe, and they could be much less like Merkel in their ability to or desire to work with Central Europe. And of course, the big test for Germany in the eyes of Poland is going to be to what extent the new German government does or does not recognize that the Nord Stream 2 pipeline that's being constructed with Russia is a threat to national security of Central Europe and Ukraine. And they'll be looking to Berlin to see if they follow through on their promise to either shut down or fail or not permit the pipeline to start functioning as long as there is a threat of Russia to Ukrainian independence. I'll conclude by really talking about the fourth area of pressure on Central Europe, which is, within Central Europe itself, funny enough. I've already mentioned the tension between Poland and the Czech Republic over the Turów pipeline. And what we've seen over the last year, certainly, is an erosion of many of the institutions that were holding together Central Europe as a unity. The Visegrad Group in particular, for over 30 years, was seen as a real vehicle of collaboration between Poland, Czechia, Slovakia, and Hungary. That is now not so much seen as the V4, but now seen as the V2+2. You've got Hungary and Poland on the one hand with a very different set of issues and agendas in relation to Brussels, in contrast to Czech Republic and Slovakia, who in different ways are improving and strengthening their position and relationship with Brussels. And funny enough, you even have elements of tension between Poland and Hungary, particularly over the attitude and policy stance towards energy issues, Russia. The other institutions that traditionally the Central Europeans have been looking to, whether it's the Bucharest Nine in the framework of NATO, that's strengthening. The big question mark is over the future of the 3 Seas initiative. This has always been a flagship program driven primarily by the Poles and the Croats to establish a functioning financial framework for investments in infrastructure projects, energy projects, digital projects in the region. We'll see how much dynamic there is in that relationship. There is a summit coming up in June of this year in Riga, but with a lack of really strong funding coming in and a cooling to a large extent by the Biden administration. We remember the Trump administration was very pro the 3 Seas initiative. The Biden administration really not focusing on it so much as the Trump administration goes. We will see exactly where that 3 Seas initiative ends up. Overarching all of this, of course, is things that no Central European government can ultimately control is COVID-19. These countries are moving out of the worst phase of the crises at different rates. Different countries have different successes. Poland in particular is a worry. The low level of testing, the low level of vaccinations make Poland particularly vulnerable to the viral shock. And we'll see what the Omicron variant does to Poland over the next few months. But as I say, just in conclusion, all of I've been saying is going to be really overshadowed by what happens in Ukraine. In a worst case scenario of a full-on Russia invasion, this will have major political consequences, but also economic consequences. Remember, not all of these countries are in the euro. Poland has the zloty, Hungary has got the forint. What will happen to those currencies if there's a war on their eastern doorstep? Will that result in a decline in value? Will that result in problems? Inflationary pressures are increasing in some of these countries. The worst thing that might happen is a social problem of mass migration of Ukrainian war refugees, literally knocking at the doors of Central Europe, with the biggest door being the Polish border, as well as the Hungarian border, and we'll see what happens there. So just to conclude, thank you very much for your attention. I hope that I haven't depressed you too much, but unlike last year when I was here, things are much more uncertain, and there are much more prospects for instability in Central Europe, much greater flux, mainly due to these new pressures coming in from the east, from Brussels, from a question mark of how the US relationship will develop, and a fragmentation of those alliances and relationships within Central Europe that had in the past held these countries together. So a much more uncertain time, but one thing that history has shown us, this region and these countries are incredibly resilient. Their desire for freedom, their desire for independence, their desire to be part of the West is unsurmountable. If 50 years of communism couldn't destroy that, a couple of years of Mr. Putin won't either. So in the very long term, this part of the world you have to be optimistic about this region just because of the spirit that's here. In the short term, we'll have to put our seatbelts on and keep our fingers firmly crossed. Thank you very much for your attention.
Great, thanks very much. Really interesting to get your view, Marek, as ever. Thanks very much for joining us. I know you've got to head straight off to Washington now to advise some people and clients in the US, but thanks very much for that overview. Interesting to pick up on that in the in terms of the context of the real estate side, and we're now going to have a presentation from Dorota from Colliers. So over to you, Dorota, just to look at I suppose in more detail at the real estate side.
Yeah, thank you very much, Richard, and good morning, everyone. My name is Dorota Wysokińska-Kuzdra. I'm the senior partner and head of corporate finance and living services for CEE at Colliers. It was a very interesting presentation of Mr. Matraszek showing some geopolitics. So on some geopolitical, challenges and movements. So let me also start the presentation with some kind of global outlook. We, as Colliers, we did a global survey end of last year, where we wanted really to ask investors for their sentiment, the investment strategies, and what are the main concerns and issues they are dealing with. Out of the investors we asked for, majority of them were investment fund manager, but we also asked public listed companies, private equity companies, or institutions. Most of the investors deploy their capital in form of direct investments. This is the vast majority, but also they invest indirectly or in form of platform and partnerships, as well as M&A transactions. The investment activities is pretty equally divided into the three main regions, with 1/3 towards Americas, EMEA, and APAC regions, respectively. the global investment volumes for this year stands for 1.5 trillion of euro, and this is pretty much in line with the annual average of the last 5 years. So in terms of global numbers, we see pretty stable in investors' demand for real estate. However, we see a certain shift between the asset classes. So you will see the increase in industrial and logistic and residential. So the investment volume is slightly higher, and they are slightly lower in retail and offices. I think this sounds pretty familiar to this part of the region as well. Out of the 20 most interesting destinations for the investment, half of them are located in Europe. Majority of them is London and Greater UK, main German cities plus Greater Germany plus Nordic cities of Copenhagen of Stockholm. The remaining 10 cities are equally divided between mainly United States of America and going to the east, main megacities of Singapore, Sydney, Melbourne, and Tokyo. On the next slide, you will see the investment volumes, because I just would like to put this into perspective. You remember this 1.5 trillion of euro of the global investment volume. Again, absolute majority, around 1.2 is or 1.1 is counts for United States and China, which leaves only, if you like, 300 billion euro of investment into EMEA region. What are the main challenges of the investors and the main positive sides? On the next slide, we can see it. On the positive side, most of the investors see the economic and rental growth as a positive sign. Also positive is the rising inflation, which is maybe slightly surprising, maybe not. I leave it for the later discussions. And on the challenges, we have the rising construction costs and all the constraints connected with COVID-19, starting with returning to the workplace and all the travel restrictions, which make the whole investment process pretty difficult. Let's see how it looks like on the EMEA region. Again, let's start with the investment volume. Again, pretty stable in terms of the global numbers. The 300 billion on a rolling basis this year is pretty in line with the annual average of the last 5 years. But again, similar shift to what we have seen on the global level. So an absolute increase in industrial logistic, pretty stable residential investment though, however, a slight decrease in both retail and offices. Again, in terms of numbers, out of the 300 billion investment volume, majority goes to UK, Germany, and France and Nordic countries. You see the gray stands for last year numbers. We forecast that this year will outperform the last year in terms of investment and volume. The blue number stands for the first 3 quarters. So after we have the final year results, this should outperform. So we end in the slightly lower level, but as said before, the general trend is pretty stable. The key findings on the EMEA level are also pretty positive. 81% of investors are positive about the economic growth. Nearly 70% are pretty positive about liquidity and rental growth. 74% already implemented instruments to measure environmental performance of the assets, which is absolutely in line with the global priority of ESG. And London remains as the #1 investment location for 2022. In terms of the asset classes, again, I think this is not pretty surprising, and I hope this sounds again familiar to our part of the region, where we have the 3 priorities in absolutely #1 industrial logistics, the darling asset class of last year, offices and multi-family residential. How does it look on the CEE level then? We do not have the final numbers, but we expect that the investment volume in CEE region will end up at the level of 11 billion euro. This will outperform the last year, which was the pandemic year, pretty hardly hit in terms of investment volume and investment strategies of many investors. But we still have room to improvement to the best year in the history, which was 2018 and 19, where the investment volumes across CEE were close to 14 or above 14 billion of euro. 50% of the investment volume is counted for Poland, but also, and the remaining is spread between other and remaining CEE countries, starting with the biggest part of Czech Republic, Hungary, Romania, Slovakia, and Bulgaria. You will see on those graphs pretty equal distribution in terms of investment into different asset classes, mainly office, retail, and industrial. However, similar to what you have seen on both global and EMEA level, we have now an absolute shift from decreasing retail and increasing logistics. Logistics was or is responsible for more than 50% of the transaction volume during the last year, and we see the increasing number of living sector investments, which is something new for CEE, but as you have seen before, it's not new on the EMEA region, and residential or living asset classes were always an investment product for the investors. And where the monies come from, which invest into our region. So no surprise to Poland, 98% is the international money. Here again, nothing changed. Maybe with the REIT legislation, if one day it's introduced, we can change the percentage and increase the domestic money. However, we have a pretty good balance in Czechia and Hungary, where the domestic money is responsible for close 50% of the transaction. On the global CEE level, the domestic or CEE money stands for 1/4, which is pretty good results, and the 3/4 are pretty equally spread between the usual suspects and usual investors of coming from Europe, America, or Asia. We see the increasing interest from Middle East area. And I think generally it is to underline that domestic investors from Czechia and Hungary were the most active, or one of the most active investors in Poland and generally in CEE region last year. A few words about the yields, because logistics is since a few years already the darling asset classes. So the yield spread between especially in Warsaw and in Prague, between core yields for industrial and logistics in Warsaw and Prague and Germany, which is a representative country for Western and for us to compare with. The spread is pretty narrow now, but nevertheless, the demand from tenants is so huge that we do not see that the investment activity, industrial logistics, will somehow stop. Maybe the yield compression will not be that rapid as we observed, especially last year, but this will not somehow limit the investment activity, and we maybe should expect some kind of rental growth. Basically, the rental growth should be expected also in other asset classes like offices. If you look at the office market, the yield spread is pretty healthy between the core yields in Warsaw and Czechia, between 4 and 5 to below 3% in Western Europe. And if you look especially in Romania or Hungary, with the office yields between 6 and 7%, gives you not only a very good gap to Western yields, but also those countries provide with a very good cash-on-cash returns and dividend yields. But I'm sure we will elaborate about this in a second. We sum up some key points for the discussions. We have some kind of common challenges, which I hope it sounds familiar to what you heard from the beginning on the global and EMEA view. ESG is becoming the #1 priority also for our domestic investment. We face, and one of the main challenges are rising construction costs, also rising labor costs, plus energy costs, of course. We have inflation, which on the global level is perceived as a positive. Question will be how you guys see it. And of course, we have questions related to specific asset classes. Is office eventually back as an asset class? Will industrial logistics continue to develop? How about retail? Can we expect a strong bounce back in 2022, or this is still too early? Or how about the residential asset classes or the living services? How quick it will develop, taking into account that we start actually from scratch and we compete here with both residential for sale. and especially the residential sectors facing the challenges of rising construction and labor costs. So I would like to close here, and Richard, over to you, and let's start the discussion.
Great, thanks very much, Dorota. Really interesting, I think, to pick up on that view. We've got a super panel now. So we have Dorota, as we know, and we'll introduce you a little bit more in a minute, Dorota. But we also have Marcin Jusic, who's a member of the management board, both the CFO and CIO for Capital Park. Great to have you. And we've got Victor Constantinescu. Sorry, Victor, that's me not being able to speak properly in the morning. Who's the managing partner for Romania and co-head of real estate for CEE for Constella. And we've got Hubert Abt, who's CEO of New Work Offices. So we've got a spread as well of those based in Poland, as well as Romania and Hungary. Let's just start with you, Victor. Just a quick introduction of yourself and the business for those who may not know.
Absolutely. Thanks very much, Richard, and thank you to all the panelists and all the presentations this morning. Great to be here. My name is Victor Constantinescu. I know that's a mouthful. My name is very Romanian. My accent is not. I'm actually Canadian born and raised, but I've been in the region now for over 15 years. I practice real estate, and Kinsteller is a regional law firm with offices throughout CEE, and I'd like to say that we have one of the top practices in the region. So look forward to the panel discussion today.
That's great. Thanks very much, Victor. Hubert, over to you. Quick introduction of yourself and the company.
Yes, thank you very much, Richard. Good morning, everybody. My name is Hubert Abt, the CEO and founder of New Work and WorkCloud24. We are a classical flex office operator. However, we're also looking in the digital business and ESG, workplace strategy, consultancy stuff, and I guess the main driver for the future, or let's say the presence today, besides how we bring people back to the office and how we can increase the utilization of the so-called leased office space, is definitely the ESG and the digitalization, and this is what drives New Work towards 2022. Now, nowadays we are exposed in 3 countries in CEE, but we definitely will grow further. And yeah, let's see what the year brings.
Great, thanks very much. Marcin, over to you.
Good morning. Thanks a lot, Richard, for introduction. I'm CIO and CFO of Capital Park, Polish public listed on the Warsaw Stock Exchange developer and investment firm. We are focused on the Polish market, on the Polish commercial market mainly, although we are looking more and more into residential sectors as well, both higher end resi and also PRS to some extent. We are very much also focused on the larger scale mixed use projects, and especially those that we can, let's say, within which we can create more like a district with a really, multifunctional 15-minute city. This is our area of focus right now. We have such projects identified in Warsaw and in Katowice. Although we are, from our history and the past track record, we are very, very well known on the Polish market for building green Eurocentrum office complex, 85,000 square meters office complex, Royal Wilanów, which is a 37,000 square meters mixed-use concept in suburban or non-central location in Wilanów. And also, last but not least, but actually that's our flagship project, Noble Factory revitalization of a 2-hectare former metal plater factory in the heart of city center west, which has now completed just recently.
Great, really interesting, Marcin, to pick up on some of your views, and that mixed use trend is one of those other key ones, I think, along with ESG, digitalization, that we've already talked about, that we'll dig into a lot in this discussion. Dorota, you only made a very brief introduction of yourself during the presentation, so now's a chance, just a quick introduction of yourself and colleagues in the region.
Okay, thanks so much. So once again, Dorota Wysokińska-Kuzdra, heading the Finance and Living Services Department for CEE. Being part of the global advisory company is presented across the world, listed on the Toronto Stock Exchange. We are pretty active in the region. We have offices in each of the countries, advising clients across all type of asset classes, and especially recently pretty active in the residential sector, but of course still offices and mainly industrial. I don't know, our expertise number one, obviously.
Great, thanks very much. Let's maybe just a quick start. In fact, before I do that, thanks very much to everybody who's joining on the live stream. Really great to see everybody there. On the files, you'll be able to download the presentations as well as a report that Hubert's company has done, which I think is interesting. So you can, on the file section, there's both the presentations from Marek and Dorota there that you can download, as well as some research from Hubert there. You can also, as you can see, put comments in the comment sign, ask questions, and we'll make sure that we come to those. One of the joys of being live is that we can hopefully pick up and answer some of your comments and your questions. Marcin, maybe let's just start with you. Just as a kind of quick overview, I suppose, where do you see the market at the moment in terms of Poland, obviously where you're operating? I suppose, how do you see the current market?
It's a very positive market sentiment, despite all the turmoil with the geopolitical situation. We can see the economic growth very fast, over 5% per annum for 2021, and now 2022 is forecasted at a similar level. That obviously translates also into good dynamics on the real estate market. And also, I must say, our resilience during pandemic strengthened some of the trends that we saw before, but now also contains some other investors to actually be more focused on Poland. And this is across all sectors, I must say, especially visible in the warehouse sector, where we during pandemic, we all know that there were huge problems with the supply chains, and some of the countries were blocked for transport. So that made a lot of companies actually make decisions about nearshoring and bringing production and distribution centers to Poland. And I think that trend will nearshoring will be a big driver for the warehouse market in Poland. Now we have about 22 million square meters of this warehouse stock. It's actually expected to double within 5 years. So it's a big change for Poland, and big driver for the growth in both, let's say, industrial, so manufacturing, and also distribution centers. And also the pandemic strengthened the presence and activities of our shared service centers. So global companies actually noticed that during pandemic, and this is due to good internet penetration in our country. Actually, when people went home and working from home remotely, these centers didn't stop. So that was actually something that was a very positive sign, and in comparison on a relative basis to other shared service centers locations like in India or Philippines, that's a much better situation. And because of this resilience, a lot of people actually decided to move their operations to Poland and strengthen the trend that already existed before pandemic. Of course, this is a big driver for the office demand. So we continue to be a huge fan of offices, bullish on offices, and we can see also on the Warsaw market, especially, that there is a gap in supply over the next 2 years, 2022, 2024. There is a very limited new supply coming to the market. So the vacancy rate, which is now over 12%, will go down to single digits. The new buildings that are just about to be delivered or has already been delivered to the market are already pre-let. We could see just recently Sky Sava has been fully let to PKO-BP. Also, if you look at Warsaw Unit, or Skyliner, Forest, Lixa, all these buildings are filling up very quickly. So we can see, the great demand and the gap in supply. So that will drive the vacancy down. We also think the rents will go up a bit. And what is also in terms of the post-pandemic trends, very, very much visible in not only, I think, Warsaw and Poland, but I think my colleagues will also confirm across the whole region, is that the suburban offices are coming back to life. And if we actually own Royal Wilanów, which is it's close to the very dynamic residential district where people live, and we also own Norbin Factory, which is in the very center of Warsaw. Both assets are fully let, but physical occupancy differs very much. So suburban offices are like 70% physical occupancy, even despite the fifth wave of COVID. And Norbin doesn't enjoy that kind of occupancy. So people are basically not afraid to go to the offices. They are rather more afraid of jumping on a metro or crowded means of transport. So this trend will strengthen, in my opinion, and suburban offices will gain in strength, and that will also translate into not only growth of rent, but also shrinking the gap in yields between the centrally located offices and non-central offices, which is now about 200 basis points, 150 to 200 basis points.
Okay, interesting, Marcin. Thanks very much. Hubert, it'd be good to get your perspective, I suppose, picking up on some of those points from Marcin there about what you've seen and what you expect to see, particularly on that office side.
Yeah, thank you. Well, naturally, we are a bit closer to the clients because we have about, 600 lettings or service contracts a year, one-to-one with smaller tenants, but also more and more with corporate tenants nowadays. So I would say it's getting worse before it's getting better. There is a split in between the qualities of the buildings, and there is a pressure on utilization from the ESG compliance side coming up. That means if you talked 1 year ago with the asset manager, like call it Immo East or Immofinanz, sorry, or CEE Immo or something like that, or Allianz or Deka, they would have told you, we are not concerned. We're having 98% occupancy and everything is fine, right? While everybody knew that's only the one side of the coin, that a lot of space is on sublease conditions, and even so spaces are fully occupied on the paper, they are not utilized at all. And that means for every tenant, but also landlord, there comes a responsibility to report the utilization of space. Comes with the embedded carbon, which is 10 times higher than the operative carbon, and then you're coming into a trap. That means, I think, and I guess we showed that in our report as well, we're getting closer to the 20% vacancy instead of the 12%, if you really disclose all available spaces. And yes, the top locations in downtown will increase. They will be able to achieve a premium rent at above the headline, but a lot of other properties for office usage will lose significantly and will need a complete refurbishment towards ESG, and also will need a complete adaptation on flexibility to make that space available for future clients' needs. That's the one thing. When it comes to flex, I guess it's the fastest growing segment beside logistics. According to Jones Lang, we should be about on a 25-30% market share on office stock, while all the markets, be it in Prague, be it in Hungary or in Poland, are between 2.5% or 4% maximum. So there is a lot of things going on in the future. It changed completely from the perception, is flex here to stay in 2019, towards the statement, how much and which format of flex will be good for my portfolio last year. And this year, the only question is how fast can I adapt a significant portion of flex, because it's a clearly demand from the tenants and the corporate clients. So to bring it in a nutshell, we think that the transformation from space as an office, which is an office-centric approach from the landlords, is the past. We know a transformation will take 1, 2, 3 years. And space as a service, what we know from the shared economy, what we know from software services, from car sharing concepts, from Airbnb concepts in the hospitality business, this part will take, this part of the business space as a service will take a significant share from the office tech markets. And it's a question on the landlords, how fast they are adapting to these services, because even so you are quite keen on innovations, you still have to convince your bank and your shareholders, because you have a completely different collateral structure with space as a service towards space as an office. And I guess that's the real challenge for the market, together with digitization and ESG in the next 2 or 3 years.
Great, thanks, Hubert. Victor, maybe coming to you. Obviously, you're based there out of Romania, so it'd be good to get your sense of I suppose what you've been seeing in the market and where you see that heading.
Yeah, I think for the Romanian experience, it really echoes a lot of the other opinions that were expressed earlier today. We don't see any kind of slowdown in terms of the real estate market here is booming. I think it's basically just a lot of pressures that some of them were already mentioned in the presentations earlier, but there's just a lot of capital flying around. And you're just getting a lot of interest, not just in Romania, but also Bulgaria, Hungary, Serbia, and other countries in the region that see our markets as a good deal. As Dorota mentioned in her presentation earlier, you're looking at yields that are 7% or above and things like this. And as you move further west, those jurisdictions are getting more and more expensive. So people are looking to get a better return on their capital. I don't really see, logistics is the #1 probably area that we're seeing a huge amount of growth, not just in Romania, but other neighboring countries as well. Office is still plowing ahead, plowing forward. And it's just really a question, if the investor can get the numbers to work, whether they have a long-term tenant, whether there's a sale leaseback, and all these the different dynamics. But otherwise, the market is hot.
Okay, great. Thanks, Victor. Question just come in from Tristram. Thanks very much, Tristram. And we can either decide to tackle this now or later when you've had a chance to think about it. Whatever happens between Russia and Ukraine, will the constant tension there and in Belarus negatively impact investment in the CEE region? It'd be interesting, I suppose, just to get your sense of. Victor, you mentioned there's a huge amount of capital that's looking. I don't know whether anybody wants to pick that up in terms of whether or not there's going to be sort of a hit on sentiment overall for capital looking at the region. Does anybody want to pick that up, or you can think about it and come back to it later, should we wish?
I'm happy to just say a quick word about that, Richard. I just speaking from Romania, where like other countries, we also share a long border with Ukraine. Unfortunately, there will be a class of investors who know our region very, very well, and whatever happens to you in Ukraine likely will not dampen their activities here in any form or fashion. However, if you're looking for new capital or new investors, unfortunately, we are lumped together often with our countries. I remember years ago when the Crimea crisis started, it was either Mark Antony or somebody canceled a concert in Ukraine or something like this, then in Romania, and then there was an investor in the US made that connection saying that you guys must be having a problem with Ukraine. You have a border problem there. You're going to be next up for invasion. People make those linkages, unfortunately, and those that don't necessarily know the region very, very well. I think it's naive to think that it won't have an impact. But I think, like I said, that the investors here that are already here are the ones that, especially local capital, you will not see a significant impact.
Great, thanks. Another question come in as well from Richard Stevens. Richard, thanks very much for joining us, and delighted as ever to be working with you as a media partner on these events, our local media partner there out of Poland. This one's for you, Hubert, actually. From the outside, it's hard to see how the flexible office business model can be profitable. Short leases, non-established tenants, etc. It would be good to hear your perspective on this. So I don't know whether you want to give a perspective on, I suppose, the prospects for the sector more widely.
No, you can read it in the report. it's all laid out. The good thing is it's transparent nowadays, right? We don't have the black box anymore. So indeed, 70% of the entire flex operation, we speak about 2021, okay, are not profitable yet, right? But at the same time, approximately the same amount of business owners is super positive about the future. That means, again, flex is here to stay. This is clear, and it becoming closer to 20 to 30% on office stock flex demands than the current 2.5 to 4%. So this is the overall perspective, and it will grow significantly. And any landlord who wants to be part, and wants to satisfy clients' needs will need that. But what the real challenge today for flex is, I mean, in 2020, 2021, it's clear there was lockdown, so we couldn't sell real, right? We could occupy our centers against the rates we could ask, right? So if you want to keep occupancy on 70, 80%, you need to lower down the rates on the new sales at least. So this we can make up little by little nowadays, but the real challenge now is 300%, 800% price increase on utilities, on gas and energy, 8% inflation average. If you put that all together on a 15 euro market, so if the average rent is 15 euros and the time before it was plus 4 euro service charge plus 1 euro 10 or 20 utilities, you may end it up with 20 euro total, which is today overnight 24 euro, right? You can make the math that's simple as that. So now what is the challenge here? Landlords having the tool of reconciliation, so they can ask now, the price increases from last year, while a service operator or a flex operator doesn't have this tool. That means we need to ask our clients now 20% higher prices for the new sales and extraordinary temporary requests on utilization and energy price increases, right? So again, just as the time switched in the favor of the flex operators, in a way, we have the next challenge in front of us, which is the increasing prices, which we need to give forward to the clients. But these are temporary challenges in each operation. Everybody is in the same boat here. That doesn't change the fact that flexibility is demanded by the client, and you have the choice, buy or build. So you can cooperate with a flex operator, you can do it on your own, and we see all the big landlords are doing that exercise already. And of course, talking about flex doesn't mean in any case there's a flex operator. What we're talking about, and the report clearly shows that, is the flexibilization of the lease itself. And everybody who's on the call witnessed 2008. The average term of a lease went down from, let's say, 6, 7, 8 years to 3 to 5 years, right? You remember that one. And now it came the COVID with the lockdowns, and now the average term of a lease goes down again to 3 years and less. And this is what happens. That means the lease as a long-term commitment is not the common standard tool anymore, and the core space committed goes towards 50%, while the flex space committed goes towards 50% as well. As maybe before, the core space was always towards 80 to 90%, and the flex space was only 10 to 20%, right? So these are the general shifts which we see in the markets. towards flexibilization, but the really reason for that is based in the shared economy and in the digitization. The impact from hybrid work and work from home comes. It's not here already. So this is not what the flex drives today. In 1-2 years from now, when we have the legislation on the labor law, how we work from home, how we can deal with that, if we have all the application installed, book and pay function, subscription model, all that stuff, then there comes an additional wave towards the flex. But what we see now was already invented 5-10 years ago. And the real estate, as I always say, is the very last industry in the road to adapt the shared economy and the digitization.
Great, thanks very much, Hubert. Dorota, maybe just coming to you. I wanted to pick up a little bit on, you mentioned earlier in the presentation around the REIT side, because we were looking at the capital, and it was interesting to see the development of the capital over the last few years as well in the CEE region. Do you think that that this is going to be the year, or almost the year, for REITs in Poland? What's your sense of that, and will that make a significant difference?
Yeah, it will make a difference, and I think this is the instrument which is missing, and we are as industry discussing this great investment tool since late 2016, and I'm looking at Marcin now because we jointly attending different type of forums, roundtables, discussions, giving our comments, knowledge, etc., exactly about the REIT legislation. I think this is exactly this tool which is missing, where we can invest in a pretty easy instrument without any entry barriers, etc., into real estate. And I would say our part of the world, or Poland, if you like, the people understand pretty much real estate and likes real estate as investment tools, because you see it on the increased activity of individual buyers of apartments. But again, this is always a kind of entry barrier, which is not existing in REIT legislation. And of course, REIT legislation will open the possibility to invest not only into like single flats or single apartment, but also into commercial real estate, which is it's cyclical, but on the long term also pretty stable. Whether this will be introduced this year, 2020-22, I don't know. To be frank, we had again a kind of resurrection of the REIT subject 2021. But the resurrection was pretty quick, and then it died again because of some kind of changes of the like team who is responsible for implementing this on the governmental side, so to say. But let's hope the discussions will continue, and that the REIT legislation will be introduced in form of covering all the cash-producing real estate assets without any limitations, because I think this is also the key, because we had also a lot of discussions already during the last year where they should be limited to commercial real estate, residential real estate, or in fact every real estate which is well balanced and cash producing. So yeah, I do hope this will come one day, because I believe this is also great saving instruments for the people, really, like on a long-term basis, because this is how REITs should be perceived on a long-term basis. But yeah, so far we are in the world without these types of instrument. Also, our pension funds are not allowed to make a direct acquisition of real estate. So this type of investment, which is pretty common by pension funds of other, of Western countries, where they are allowed to make a direct acquisition, we are somehow limited here. So this is the reason why we have so little domestic capital. On the other hand, you may think about this in a positive way, because without having domestic capital, we are pretty great scene for the investment, for the international capital, right? And I would say, as I said during the presentation, 2021 was absolutely the year of the CEE capital investing into Poland. And I think, and I'm convinced that this trend will continue this year, which is, by the way, not bad. And I think from the international capital point of view, this CEE domestic capital, if you like, will be a strong competitor in terms of pricing and return expectations, but also understanding the risk profile. So I think the CEE capital will always look slightly better, and the risk assessment will be better of our projects and of our general situation than from Western countries. Which is also not bad, because I think eventually what counts is the liquidity on the market. And after 2020, which was to some extent a year of let's wait and see what will happen, and you see it in the numbers of transaction volumes, which dropped from 14 up to 10, which is a significant drop in transaction volume in our region. We see the recovery here. We see the, of course, logistic and industrial is the darling asset class, and I said it already today. There are no signs that it will not continue during the next 1-2 years. We'll see what will happen later on. But what we see from the investors' point of view, that the offices are back, even though the whole discussions about work from home, pandemic, and again, a kind of wait and see mood of many investors, the investors are back. And likewise, as a global trend, we will see that the core asset classes will see very strong competition. So you will see strong yield compression continuing here, and we already witnessed some transaction during last quarter, which established really record yields on both, core offices in city centers, but also core offices in regional cities, and the trend will continue towards not non-core or non-city center locations as well.
Okay, good. It would be interesting, Marcin, just to get your view. You mentioned some of the opportunities and some of the growth areas earlier. It'd be interesting just to pick up on some of the challenges. Hubert mentioned there, obviously, one of the challenges in terms of inflation, rising prices, those kinds of things. I suppose, what are the challenges that you're seeing in your business, particularly for 2022?
Yes, of course, I agree. Construction cost inflation is something that is very worrying, and energy prices also went up. I mean, on average, inflation is about 8%, but energy prices went up, 20%, in some cases 30% up. So that's very important, and that will of course translate into higher costs of occupancy, but also higher costs of construction, which will again, boost the prices of apartments and offices, or make some of the projects less profitable. So that's definitely something to worry about. On the other hand, we can see that investors have enormous amount of money, and 2021 was a record year in terms of the fundraising globally. And 2020, 2021 were, because of pandemic, some of the investors actually put their decisions on hold. So the 2022 we expect to be a catch-up year in this sense, and real estate, especially with the leases which are inflation indexed in times of inflation, is a great place to be, and we will see definitely increased allocation to real estate among different investors groups. So there are pluses and minuses of this, and real estate is well positioned and a good investment in times of inflation. So we have to also remember that.
Great.
Richard, if I may add to this, I think with the rising construction costs, maybe this will be a trigger to rent increases, because if you look at the industrial, logistic, and offices sectors, the rents are in fact pretty stable. We haven't seen like a major rent increase really, and you cannot keep it forever, because if you look still at the capital values here in our part of the world in comparison to the Western countries, the gap is significant. And again, the rising construction costs, I mean, how much more you can afford the yield compression. Of course, yield compression will continue, no question about this, maybe to lesser extent on the industrial logistics, still on the offices. But I think this should be a trigger really to rent increases, and this should be a healthy rent increase. Whether this will be linked to inflation or not, we will see, because what we are hearing also from some of the developers that they will not use the rights to index their leases according to the current inflation, because they think it's not sustainable, it's long term. But nevertheless, there should be pressure generally on rent increases.
Okay,
it's good. It's good that in Poland, normally in commercial sector, the rents are in euros, so that's they are not linked to Polish inflation.
Thanks God, yeah, I would say, because otherwise, I think it will be really a huge debate about indexing the contracts by 8% or something, right? But nevertheless, even on the eurozone, we are on the high levels, which I don't think also the tenants have expected on such high level. Plus, again, what was already said, the operational costs are increasing, yeah, which basically goes on the account of tenants, like energy, yeah, on both individual usage and building usage. And still we do not have much instruments on sustainable energy and using the energy on a lower cost basis. We still buy energy, yeah, which is going up, and the prices are going up.
I wanted to pick up a little bit on there's been a lot of discussions around ESG. Hubert mentioned ESG and digitalization. And I'll come to that in a second. But Victor, I just wanted to pick up with you in terms of ESG, and we'll actually be running a session in April in Warsaw. Specifically, the CEE summit is going to obviously look a little bit at the capital markets as usual, but we'll be dedicating a large amount of that to ESG and the influences there in terms of the CEE markets. But what's your sense of that, Victor? I mean, I suppose, how are you seeing that across the region, but particularly also there in Romania? Is that now much more an issue than it was previously? How are you seeing it, and how are your clients seeing it?
Absolutely. This is no longer a sort of, what a nice to have or fringe issue, whatever adjective you want to choose. I mean, this is now becoming at the forefront in a lot of investment decisions, and people are asking already when they're looking at properties, to what extent is this ESG bulletproof, if I can use that expression. These particularly environmental concerns, because of these rising costs and things like this, solar panels, alternative forms of energy, are discussions that are happening right away. And then obviously on the social and the other things, on the governance side as well. And I think, this is something it's not going to lessen, it's just going to increase as time goes on. And I think that's a safe conclusion for the entire region.
Okay, good. And Hubert, obviously you mentioned that in your introduction. So I guess, what's your sense of that, and also that other key trend of digitalization that you mentioned?
Well, if you want to utilize space more than what we have before the pandemic, the average utilization of a so-called occupied office was about 55 to 58%. Okay, now after the pandemic, the so-called occupied office is only 40% utilized. So if you know that you have, I don't know, 3,500 kilowatt in a 1 square meter of office embedded carbon, and in Poland you have 850 gram carbon emission on 1 kilowatt hour out of the coal power plants, right? Then you get a little bit of an idea what your certificate looks like here. To make a long story short, you get about 1.2 to 1.5 tons embedded carbon per square meter GLA. And if you now want to report that you need to report actually, if you measure that duly, that you use this space only by 40%, you're getting killed from the stock exchange if you're public, or from your shareholders, or whoever you talk, right? You can talk to Allianz, to Invesco, to all the big guys. Blackstone is delisting frequently companies which are not complying to ESG anymore. That means we do not need to wait for the next CROP conference, the capital market will force us to be much more quick here to adapt to that. And how you can comply to ESG? You need to collect data, and how you collect data via digitalization. So it's simple. That's not rocket science. That means you need to build a digital twin of your building, and then you need to start measure as much you can. Okay, so that's the main context what we're talking about when it comes to successfully letting process and utilizing the space. Then of course you can do a lot more with digital tools, because now all of a sudden, as you have a digital twin, you can show your tenants how they can use the space more efficient, right? Which has two parts, two big points for them. First of all, they can manage the hybrid workforce much more efficient. And secondly, you can reduce the operative carbon as well here. So this is the context basically which we are dealing in the future when it comes with ESG and digitization. While the social responsibility is something the corporate clients picking up already frequently. That means if you can't show a kind of holistic approach, it doesn't mean that you can comply, because we do not have a holistic standard reporting format for all three categories, right? That's our problem. But what we can do, we can show our tenants or clients or investors what we are doing already transparently, to show them, okay, we take it serious. And I guess this is the most what you can expect today. But if you don't show this part, then you will lose. That means the deals which you are missing, which you do not come into the shortlist anymore, because somebody has a box there and says, is this ESG? You know, is there any measurements in place? You will not be invited anymore to the request or information or to the tender or whatever it is. And that's the problem. That means, I guess, the transformation goes much more faster as we're expecting so far. And, you know, we measure the carbon emissions since 1960, right? So nothing changed. If you're going to the curve, it always goes up, 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 up. But what has changed today is we're running out of time to do nothing. And when the capital market's picking that one up, and we know from the banks, even on the lending side, not even so much on the investment side, that they starting measuring and they need the surveying that stuff. So I guess that's the big thing. And if you're talking to fund managers in, let's say, Canada, which are much more sophisticated than our guys, or US, it's on the landlord to be responsible what the tenant is doing and how they comply with the tenant's business in the building they occupy from the landlord. So it's completely deep dive approach already there, that even the landlord needs to take responsibility what the tenant is doing in this regards. And that shows us a little bit where the journey goes. And we are years away, but we don't have the years to transform. That means we need to be a bit more faster, but there are some lighthouses already which we can use as best practice examples. So I would say we as New Work, as operator, we are not owners of the space. That means we have an aligned interest with our landlords. And the good news is nowadays, as the landlords picking up on this idea, flexibilize the product, we are getting more and more invitations being service provider, not the tenant anymore. That means we are aligned interest in the management approach, in the management contract. And we're really taking care here on this ESG stuff, especially when it comes to social, but also when it comes to space management. On the E, we can't do so much on the governance yet. But I guess the end of the day, it's a good thing for the industry, because we are responsible for 38% of the entire carbon emission a year as real estate industry. And that's a kind of responsibility we definitely have to match with.
Yeah, no, that's interesting. And we'll pick that up for sure when we come to Warsaw in April. And we launched recently Impact Magazine, looking at ESG, social impact and those kinds of things, because absolutely, I think that's going to be one of the big trends going forward for the foreseeable future, really. We've got just under 9 minutes left. So there's a couple of questions that I just wanted to pick up on. There's a question come in around the logistics side. So thanks very much for that, Richard. which is everyone knows warehouse market in Poland has gone through the roof recently and shows no signs of cooling off. Is the development as rapid in Romania? Can you say something about the sector in Romania? Victor, and I'll come to you in a second on that. And it would be good to get your perspective, I think, as well, Marcin, on that in terms of the last mile in Poland as well, would be interesting. And another question for you as well, Marcin, here, which is, what's your opinion in terms of the project of the Polish government to introduce heavy taxation on PRS investors? Do you think this will happen? But it'd be interesting also just to pick your views, I think, on that residential side. So who wants to kick off? Victor, should we kick off with your view on logistics, which of course has been huge across Europe?
Yeah, indeed. I mean, in Romania, for instance, likewise, the story is just you have about, let's say, a handful of main operators here in Romania. One of them is dominant on the market, that's taking over park after park, and there's just no sign of a slowdown at the moment. Things are being built. The main concern with Romania has always been, there's actually twofold. One has been our highways have not necessarily kept up to the to demand. We still do not have, for instance, a proper highway that connects Constanța from the Black Sea port up to the Hungarian border. And the government, despite its best efforts, are still trying to, sell us a story, but unfortunately, it's not proceeding as quickly as we want. And the second issue that's sort of, I think, keeping things a little bit back is, and something maybe not mentioned until now from the other presenters, because maybe it's not as relevant, but especially in Romania and Bulgaria, is labor shortages. We are having a problem. Demographics trends are not kind to Romania and Bulgaria, and immigration is still an issue. And it is becoming a problem to staff many of these production facilities in different places because of a lack of workers. But at the moment, it is the darling of the industry, is the logistics. Everybody's looking for a portfolio to purchase, whether it be in Romania or pan-regional, something that covers a little wider region. And to answer the question, no, I don't see a slowdown at the moment.
Okay, great. Marcin, just your view, I suppose, on the logistics sector and then also the residential side.
Okay, so very briefly, we don't have too much track record on the logistics yet, but we definitely are looking into this sector as well. And as part of our mixed-use projects, where we plan certain sections of the projects to be dedicated to SBUs, also something that is very interesting and complementary to the office campuses, where you can locate e-commerce businesses or R&D centers. So definitely we are taking a look at this, and we can see SBUs investments growing, and tenant demand is really very high for that. And these are centers that are located very close to the cities or inner city even locations. So that's something that we can definitely invest in. And in terms of residential, to be honest, I'm not sure I should say something about likelihood or not passing any law, especially in taxes. We see a lot of mess, I would say, unfortunately, with regard to the Polish deal at the beginning of the year. And obviously, with regard to residential sector, there was a topic, but the discussion was more about similar approach like was implemented in Berlin, regulation of rents, etc. Whether this is a risk for the Poland, but good that it didn't develop still in a more restrictive direction, let's say, because this sector is at the start now, and we don't want to see actually any forces that will try to change the pace of development of this.
It's going to be interesting to see that development, I think, of the residential side.
Richard, if I could just jump in just for a second on that. I think this is a general trend that we just have to be careful also across CEE, is that, is there going to be a propensity for the cash grab at some point? I mean, you have in all of our countries, populism is starting to get a louder voice in many of our countries. And a lot of our countries are operating quite heavy deficits spending. And a lot of people are asking the question, where is that money going to come from? A lot of our jurisdictions are still holdouts of the flat tax, unlike other jurisdictions in Western Europe. And people are asking, yeah, those going to come back now to a progressive tax rate or things like this. So this is an issue that we're seeing region-wide. Is how does the government get more revenue?
If I may add to the residential part, I think the whole discussion started with why the sales prices for flats are rising so quickly, and that the international funds are, the main parties to blame for. But then I think after the industry discussions, that actually the international investors being responsible for PRS stands for less than 1% of the total volume of rental apartments. The discussions went into more direction of the flippers who are just buying, holding, and within 3, 4, 5 months selling with a kind of upside. Again, I think this is something which will be probably with the evolution of the market, which may disappear, frankly speaking, because some of those flippers were counting only on sales prices increases, and that's it. And I think with the rising inflation, there will be more opportunity to invest elsewhere than just flipping apartments. And also the affordability of buying apartments will be lower because of the rising interest rate. Again, the mortgage loans will be more expensive. So I think we return to a kind of normality on the residential for sale market, giving more place to development of the residential for rent. So I think that this should be, the way how to look at this.
Yeah, good. I just want to sneak in a very quick one from Nikolai Grigorov. Thanks, Nikolai, for that, which is, does the panel have any observation on the ratio of office stock to office employees in the region? It seems that in some of the capital cities, this metric is quite high. I don't know whether anybody has a view on that. Otherwise, we'll come back to you, Nikolai, on that. Anybody, any views on that? No, that may need a little more research into that. Thanks very much for that. So it's always good to just get a sort of sense of where everybody is. So just a last question to everybody. Let's start with you, Victor, which is, I suppose, key trend for 2022 or trends, and I suppose where you see the investment opportunities.
I think in Romania and in other countries here in the neighboring countries, we're going to continue to see logistics. That window is still open for a period of time. And also, I think there's going to be an opportunity for new asset classes to come in, last mile logistics, data centers, student housing, these types of asset classes that until now or private rental sector, very little movement in Romania up until now. And I think market pressures will force development in this direction. And I'm very positive, generally speaking, for the region.
Great, thanks. Dorota.
I would say like this. So if I look at Poland, I would probably bet now on the living sector, because it's a great time to invest here. We are at the beginning stage of the development, so everybody now receives, so to say, the first mover advantage and gains from it. And if I'm saying living sector, it's actually both residential for rent, but also student housing is the main one at which I would look at. And the main driver for those markets, like really the main driver, is the huge supply gap on generally residential needs and student housing, etc. But when I look broader to CEE, so the next country to pick, I would go to Romania, because I believe it's the next big market in terms of population, with a well-educated workforce, with a very good entry yield, so to say, and with a very good cash-on-cash returns and development yields. And I would particularly look there into office market, as well as residential market as well, but only because I look at the residential market in Poland as my first priority asset class, so to say. But definitely office market in Romania is something I would look at closely.
Great, thanks, Dorota. Hubert, over to you.
Yeah, well, I guess I mentioned already flexibilization of the lease or space as a service for satisfying customers' needs in the future with digital tools, ESG. But also what was mentioned before from Marcin, the suburban markets are getting more and more important as soon these regulations are implementing the labor law that people really can work from everywhere safely and sound. So you will then see a lot of what we call today co-working spaces all over in big developments, from condominiums in shopping malls. So I guess that's then really the next challenge, to overcome that one, and that's then really completely linked with digital tools. So it's challenges are on the horizon, and 2022 definitely is the year where we have the next trigger event now for the industry, with all that inflation, emerging prices, and so on and so on. But I guess it's a good thing finally that disruption finally comes to the industry, and we need to keep up with other industries in this respect, which also, you know, for the ones which are adapting faster, then is creating a lot of opportunities. And maybe you can put it together. One of it was a press conference, I guess 2 weeks ago, we had when we issued the report, and one of the journalists asked, so why in hell should everybody start today to develop in offices if it's getting so hard? And they say, well, because every crisis brings challenges, and with the challenges coming opportunities. And all this, I guess, Europa Capital recently said, Robert, 97.5% of the entire buildings are not according to ESG standards. That means we have 97.5% opportunities in front of us to convert this to a product of the future. So yeah, it's cool. I'm really completely energized for the challenges ahead of us.
Great, thanks. And last but very much not least, Marcin.
Thank you. So we definitely want to concentrate on our core strengths, which is design and development of the mixed-use schemes. And mixed-use schemes, it can be a let's say smaller scale project and brownfield development, like we did with Norbin factory, revitalization of the old factories and implementing new functions and bringing these places back to life. Or it might be in the form of a bigger districts development, urban development, where we want to design a livable, sustainable, and future-proof, let's say, city where with a dominant residential function, of course, where people can live, work, and play. That's our focus.
Thank you, everybody, and look forward to seeing you for the next event. Thank you.
Thank you very much.